Hello. Many investors can find it difficult to take charge of their finances, believing there's a one-size-fits-all approach. In today's webinar, we will be covering some of the unique challenges that women have to overcome in order to achieve our financial freedom, as well as some considerations to attain financial success. My name is Meagan Henriques, Client Education Instructor, and I'm delighted to have with me during our Investor Education Month, Ingrid Macintosh, VP Wealth, Head of Sales Enablement, Marketing, Communications, and Digital Strategy at TD Asset Management.
Good morning.
Hi, thanks again for being here with us. So if we were to get started with some of the work that you do in this role.
Well, call this my day job. So as head of Sales Enablement, Marketing, and Digital Strategy, my team and I are responsible for telling the investment story of TD Asset Management in support of all of the customer channels we work through, be it the individual investor all the way through to our institutional investors, helping explain the investment management solutions we deliver and building out our digital strategy. In addition to my day job, I have the great privilege of being the executive sponsor of TD's Wealth for Women program. And I think that's really why I get to be here with all of you today.
Thank you so much. So as an executive sponsor of TD Women and Wealth, what led you to be an advocate for women when it comes to investing?
Well, I think that I've always been an advocate for women, but increasingly I'm learning and understanding, as we all are, that there are some real differences with respect to the way that women face saving and investing conversations and their financial health and confidence. And what we really learned is that women aren't feeling financially confident. And there's any number of reasons why that is the case. But I think that we have both a business and a social obligation to make sure that we're doing our part to help build women's financial confidence and get them on the right saving investing journey to build their financial health. So really, there's that social obligation, but also we recognize that women represent probably the largest share of money in motion in Canada. Women are now out learning, they're up earning, and they're outliving men. And that means that through either earning higher wages or through wealth transfer, be it vertical from a parent or horizontal through divorce or widowhood, that women are taking control of the share of wallet in Canada. And that's critically important. So as a large financial institution, clearly we want to serve women well, but we also recognize this can be a bit of a threat to our business as well if we are not understanding what's important to women and helping women build that financial health and future.
So it does seem like in general, there is that difference in how women and men invest, and that there may be some obstacles that women face. So if you wouldn't mind sharing maybe some pitfalls that you faced during your financial journey.
Well, certainly, I think that, the very first one would be this concept of apprehension or inertia. If you're listening to this webinar today or this content today, this might be your situation as well, which is that you want to be on your saving and investing journey, but you don't feel that you know enough. You don't feel that you're financially confident. So you're apprehensive. You don't know where to start. And I think that, two of the most powerful tools for anybody investing are time and diversification, and they're both free. Right. So really getting people onto that savings and investing journey early is incredibly important in helping people get over that sense of inertia, if you will. For me personally, I probably started out early in my career trying to pick stocks or add stocks to my portfolio, and I didn't really know a lot about what I was doing on a personal level, and therefore I kind of abdicated away from it, or I didn't focus on it as much. And I think really helping build confidence gets people to the table. I think some of the other obstacles that folks face, and this is sort of tied to the same, that inertia or apprehension, is this concept of emotional investing. So once you are at the table and you're starting to invest, understanding that investing is a long-term proposition and building your financial health over the long term, and not being subject to that emotional element of investing where you are reacting to market news, reacting to moments in the market that may cause you to take pause and step away. I mean, imagine if in the spring of 2020, investors had panicked in the face of COVID when the markets dropped precipitously and they had pulled back, only to see where would they'd be today if they'd missed that moment. They, would have almost had twice as much money had they stayed in the market. So, not reacting in the markets is critically important. And then I think, again, as I say, investing or getting your money into the markets is one thing and growing. But I also think, understanding the impact of spending habits, right? It's two sides of the same coin. And understanding the impact of short-term decisions today versus your longer-term financial health. So when you're making large purchases, understand the opportunity cost of that versus getting your money into the marketplace and getting started.
So you kind of referred to April 2020, which was this unprecedented pandemic, which
Mm-hmm.
by no doubt has had an impact on many industries and sectors. Would you say that it has had an effect on women?
Oh, absolutely. I think we're having an investing conversation for sure. So a moment like that when people are watching the value of their portfolios, if they are invested, plummeting 30, 35%, that can be incredibly traumatic. And making sure that you're staying in the market, or even, if you're brave, doubling down and putting any more money that you have into the market, recognizing it's a dislocation. So yes, but yeah, let's talk a little bit about COVID and that impact on women. So from the standpoint of what we've talked about in women's growing economic power, and I sort of want to take you on this journey because it's important to understand just how far women have come. And as an audience today, I want you to feel empowered by how far we've come. The majority of university graduates today are women. Women are in the labor force at a pace never before seen. I think about my mother when she started out as an actuary, and she was probably one of 15% of women who are working, versus me now with a career and being one of close to 80 to 90% of women in the workforce. So we've come so very far there. But the impact that COVID had on women was hugely disproportionate. There were all of the headline numbers where we really saw this massive job loss impacting women in the service sector. And that's very different from what we experienced back in 2008 with the financial crisis, which was much more manufacturing, much more male-dominated impact. Women were really, really impacted this time. But that's just a headline number. That's just, what happened in terms of those headline job losses. What we really saw as well was the women that were in the workforce, their lives were disproportionately being disrupted behind the scenes more than men's were. We know that women tend to take on north of 60% of the duties at home. So we saw women now considering leaving the workforce in record numbers that we've never seen before. Lots of great research about this right now. And sort of what's going on here? The pandemic, from my perspective, should have been a moment where we demonstrated that some of the key enablers of women in building their careers, namely flexibility, agility, different work hours, et cetera, technology, should have allowed women to really have that enabler to truly grow in their careers. It happened at a time when we took away the support structure for women in terms of the home care of their children or elder care or some of those other places where women were disproportionately impacted. So I think, as we're coming out of COVID now, I really believe that organizations need to be thinking about how do we think about what the workplace of the future looks like. How do we leverage technology to enable all of our employees to live their best lives and to work in their best career? How do we look at this through a war on talent? Because if organizations aren't thinking about what's truly important to everybody, women included, we're going to start seeing women step away from the workforce, or we're going to at least not be attracting and retaining the best female talent that we can in organizations. So a real sort of moment in time here that we can really make true change, and let's not judge women on how they performed through the pandemic, because, as I say, they were disproportionately impacted by it.
Thank you. So you mentioned how companies can do better in terms of making some changes. And from what I've seen, there have been some studies that show that investment advisors approach male investors twice as often as they do female investors. What impact has
Mhm.
this had on women for them to meet their financial needs?
Well, I think this really plays into the narrative around women not feeling confident with the financial services industry. And if you think about it, um, women are more likely to want to talk to a family member about money than to engage with the investment community. We have an industry that has been long on jargon and rates of return and complex concepts, whereas women tend to think more in terms of, what will my retirement look like? Will I have the money to take care of my family? Tell me how the investments I'm making are aligned with my value system. So I think here there's a real opportunity for us to not only be supporting women and saying, let me get you on the journey, but within our own organizations, making sure that we are helping our own advisors understand where some of those unconscious bias in the conversations might occur. I said at the outset that women represent money in motion, and which is both an opportunity and a risk to the financial services industry. One of the stats that I always found fascinating was that somewhere in the order of 70 to 80% of women will fire their husband's advisor when their husband passes. So we know that women are outliving men, which means at some point, likely most women will be that financial investment decision maker in their family. So that's why we encourage women to get on that journey. But clearly there is something that's going on in their dual relationship with financial services that maybe has not been serving them well. And I think that's one of the things we're really trying to get to. How do we help our own business understand better what it means to engage with women and financial services? That's that values-based investing, that longer-term view, that thinking in terms of, will I have what I need for my family? I think it's an important part of the narrative.
You actually had up on your slides that about over 80% of women believe that their spouse knows more about investing than they do.
Mm-hmm.
How do
Yes.
traditional gender roles contribute to the investment decision making of the household?
Yeah, and I think, we've heard this type of statistic when it comes to this. We also heard the same sort of thing when you say, a woman might look at a job description, and if she doesn't have 10 out of 10 of the elements, she thinks she's not ready for it. It's the same kind of thought pattern, but there's also something really interesting that goes on with women uniquely around life changes. So whether it's marriage or whether it's having children, particularly when women have children, there is such a focus on the children. There is a tendency to abdicate certain financial responsibilities. And, we're talking in this conversation about women, but I think that if we were to go one layer deeper from an intersectionality perspective and look in terms of different cultures and different expectations, there's a lot of work that I have to do to understand this better as well. But I think, again, we'd start to see even more layers. But we know that women, when they have children, their focus is there, and there's even the higher level of abdication to the male partner when it comes to the finance and investing decisions. Take me, for example. I am married. I have 2 stepchildren, and my husband and I have 2 children of our own. I am the daughter of an actuary. I am a 30-plus year investment expert, really. I've worked in capital markets, in pension management, and in wealth advice. And so one would believe that if I am advising some of the largest pension plans in Canada on how to manage their assets, that surely I would be taking the reins in my own home when it came to the investing of our RESPs and our RSPs. My husband is a businessman. He's a geologist by training. So please explain to me why I abdicated all of the family investing decisions to my husband when clearly, one would look at our partnership and say those decisions should more naturally fit with me. So I don't care what industry you're in or what level of financial acumen you have. There is something about women abdicating or assuming that role should sit with their male partners. And then when we see women, whether it's in a relationship or talking about money, there's something, and I don't know if this will resonate with people, there's something about decision-making and not rocking the boat and asking questions, where we've seen in advised relationships, men and women with an advisor, if a decision or an opportunity is put forward, very often the man will sort of go and make a decision. Women are often still thinking about it. I want to look at it from all angles. I want to understand this a little bit better. And in that moment, if they're feeling less financially confident or knowledgeable, they're less likely to put up their hand and say, well, wait a minute, could you walk me through that a little bit more? Or could you help me understand that a little bit more? And I think that's why women tend to become a little bit silent. It's that combination of the perception of less financial knowledge and the desire to have social harmony, if you will, and not rock the boat. So, if you're listening to this webinar, maybe that resonates with you. And, for women who are getting on the savings and investing journey or who are already on it, again, don't let that concern not get you started, because there are so many different ways to get on the saving investing journey now, be it, building your own portfolio of securities, building your own portfolio of funds or ETFs, or even just selecting, a pre-prescribed offering that's available to you. There's so many ways, but getting on that journey is critically important because, as I said at the outset, time is one of the most powerful engines in terms of building your financial wealth and having a solid financial future.
So that actually makes a lot of sense to me, because I'm the same way. It takes a lot of time before I can make that decision because I want to gather all that information. Would you say that there are some key differences in how men and women differ in their investing styles?
I think it's, whether we call it style or whether we call it language, I do think that men tend to, right? I'm using broad generalizations, and they're based on data and research that we've done, but they tend to think in terms of rates of return. I think there's a bit of a competitive bias, and they're thinking about the size of the portfolio. Separately, I think women, when they look at the importance of their investing decisions, we tend to be thinking more in terms of, will I have enough? Will my family be okay? We're also looking at it through a lens of disproportionately relative to men, the concept of impact investing or values-based investing. I want to understand how the investments that I make with my money are impacting the world around me. So there might be a little bit of a different conversation when it comes to there. There is a misconception that women are more risk averse, and I don't think that is the case. They are more risk aware. And I think those are two important distinctions. I also think this concept of risk when it comes to investing is an interesting one, because, for anybody who's thinking about selecting investments, you're often asked questions or presented a narrative around risk and how do you feel about risk. So when people don't have financial knowledge, they feel like they're not willing to take financial risk. And I think the dimension that's missing there is time. And certainly markets can be volatile. So if you're risk averse, or you feel risk averse or not knowledgeable, but you have a 30-year time horizon, it's okay to say, I have a long time horizon, therefore I don't need to worry about the volatility shorter term in the markets, and I can take more risk. But often I think this concept gets confused, and people stay a little bit more close to home with respect to risk, right? So they stay more in fixed income than they would in equities, for example, because they don't like equity volatility. I would say historically, if I look back to my parents' generation, or even, prior to the financial crisis, that was okay. I think since the financial crisis occurred, we have seen structurally a very, very low interest rate environment. And for investors who take a very low risk approach, and by low risk I mean, more fixed income relative to equities, it can actually be punitive relative to their long-term goals, because, savers, investors are not getting rewarded for being in fixed income in the way that they once were. In fact, fixed income investments are not even keeping pace with the rate of inflation. So assets that are sitting there may often be trailing relative to what their future spending power is. So I caution people when they think about risk to look at that through a lens of time horizon as well, and understand that while markets can be volatile in the short run, keep your eye on that longer term prize.
Thank you so much. I actually really like that term of risk aware, because I do believe that in general, we do like to put us in a box of, oh, we're less risk tolerant, but risk aware is, I think, the right precise term for it. So
Yeah.
since you've had a ton of experience in this field, looking back, is there anything that you would have done in the past that you would do differently today through your financial journey?
Absolutely. So for sure, I would have started as early as possible. And if you're listening to this, you may be at any stage in your life stages, and it's never too late to start and to get aggressive at it. But I would have built that financial understanding of the impact of making decisions today for the long run, getting yourself invested in the long run. 40% of women would say that not saving enough early enough was their biggest financial regret, and I would absolutely put myself in that category as well. Again, the world that I was entering when I first started investing was not as robust or as full of different types of choices for me at the time. And I would say today, I think that within our own direct investing business, we have a large proportion of our accounts that sit, with money sitting in them, but not fully deployed yet. So terrific if you've opened an investing account and you've deposited some money, but if it's just sitting there stall, you haven't actually started on that journey. So get that money invested, use simple solutions that are easy to understand, and if you have a long time horizon, take comfort in having a broader, well-diversified equity exposure. Also think about your spending decisions. So if you're looking at an extravagance, or even a sort of a nice purchase of something that's a little bit luxury, think about the benefit of that, and are you going to feel great a day, a week, a month later? But also think about, if I took this, I'm going to call it $500 to a pair of boots or something, and I put it in my investment portfolio, those boots are going to sit in my closet, and this would be the dream app. I wish I thought of this. Those boots will sit in my closet and they'll depreciate 5 times after I wear them, whereas that $500 20 or 25 years from now could be meaningfully more and might pay my living expenses for months. So really be thinking in terms of the long term when you're making your spending and your savings decisions, and watch that lifestyle creep.
Great, that's very helpful. So I guess let's get to our last question, which was one of the main reasons that you wanted to get into this field, of how for women, or for some women, I should say, investing can seem overwhelming. So where should they get started, or where should they get the information they need to get started?
I think that there is so much information available. Clearly, our knowledge center here within TD is a great place to start, but start talking to your friends. I'm also a great advocate for women having more conversations with other women about money, about the community, getting into that conversation, asking others what they are doing. Read, look at the tools that are available to you on the direct investing site, but you can start simply with prepackaged investment solutions that are well-diversified mixes of investment offerings, and they get you on that journey. Build your financial literacy, build your knowledge, ask questions, but just get started.
Well, thank you so much, Ingrid, for taking the time to share your knowledge and experience with our audience today. So now let's go to our live Q&A.